Good morning, students. Today we'll study the topic valuation and analysis of securities. Basically, when we are studying the investment management, we must know that the objective of a financial management or investment management is to maximize the shareholders' wealth. And we all know that it is reflected in the market price of the share. But there are certain securities, certain shares which are not listed. And if it is not traded in the market, how a person can analyze the value of security? So the financial manager must understand the basic framework about the analysis and valuation of securities. So for this, the valuation and analysis is important. First of all, we must know the concept of valuation. The valuation is the process of determining the worth of an asset. It is important for the financial decision, and when we talk about the value can be of the financial asset as well as of the physical asset. But in this subject, that is investment management, we'll study the valuation of the financial asset because it is important to take the financial decision. अगर हमें किसी स्टॉक की वैल्यूएशन पता होगी तो ही हम डिसीजन ले सकते हैं कि हमें यहाँ इन्वेस्ट करना है या नहीं करना है, मर्जर करना चाहिए या नहीं करना चाहिए, इस वैल्यू पे मर्जर इम्पोर्टेंट है या नहीं है, लिक्विडेशन कब होगा, ये सब वैल्यूएशंस पे डिपेंड करता है. तो व्हेन वी टॉक अबाउट द नीड एंड इम्पोर्टेंस ऑफ द वैल्यूएशन ऑफ सिक्योरिटी, फर्स्ट ऑफ ऑल it is important for the feasibility of reorganization plan. Certain companies go for the reorganization, that is the reconstruction. आपने फर्स्ट ईयर में पढ़ा होगा रिकंस्ट्रक्शन ऑफ शेयर्स. कंपनी डिनोमिनेशन चेंज कर देती है, 100 रुपये का शेयर 10 का कर देती है, 10 का 100 का भी कर देती है. तो इंटरनल रिकंस्ट्रक्शन होता है. क्यों ज़रूरी है, कब करना पड़ता है, वो इस वैल्यूएशंस के बेसिस पे डिसाइड होता है. नेक्स्ट इज टू डिटरमाइन द इकोनॉमिक वैल्यू. व्हेन वी talk about the economic value of the enterprise, where uh, there are certain issues like merger of the enterprises, they have to decide the consideration. Then certain techniques of valuation are used to appraise the new investment opportunities and to determine the value of the entire firm. Next is the useful for management. There are many decisions which are taken by the management on the basis of valuation, on the principles of valuation, that enterprises is to be terminated, or enterprises has to go under the liquidation, or it has to issue the um, sweat equity shares, or it has to come up with the um, FU, etc. And another importance is to raise the equity capital. When an enterprise price is considering for the public offering, then there is a need to establish the price or a value of the issue. So at that point of time, valuation is the requirement. So um, when we are talking about the valuation need and importance of the valuation of the securities, we should understand what are the theories and the models for this valuation. The first and foremost approach is the asset approach to valuation. Basically, there are a number of methods in this asset approach to valuation, that is book value, liquidation value, going concern value, replacement value. When we talk about the book value is defined as a value of a company's asset that is carried in the company's balance sheet. So the excess of asset over debts represent the accounting net worth of the business, hence the book value of owner's investment. Net worth divided by number of equity shares outstanding gives us the book value per share. Book value is relatively easy and simple to determine, and it has little relevance to the owners and other interested in the enterprise, because the book value approach fails to give the measure of the appraisal of the enterprise. So it is rendered as a unscientific because of the absence of standardization of accounting practices, particularly related to the intangible assets like the patents, goodwill. So the book value are most useful in evaluating to the those concerned whose assets are largely liquid. जिसमें इंटेंजिबल assets ज़्यादा हैं उसमें book value concept या method relevant नहीं माना जाता. The next is the liquidation value. The liquidation value is the another method based on the asset approach employed to judge what the enterprise, or the we can say the asset of the enterprise, could be sold by selling of its component parts. Thus the liquidating value is the amount that could be realized if the asset is sold or the group of assets are sold. Thus the liquidation value of a equity share is the actual amount that would be received if all the assets are sold in the market, less the liabilities paid off, and the remaining proceeds are divided by the number of the equity share, that is basically liquidation value per share. This method is useful such method is seldom used, particularly in times of bankruptcy, because the sum of the values of the various assets when sold individually independently is often less than the value of the companies as a going concern. Next is the going concern value. Going concern value refers to the value of enterprise which is determined on the basis of pre-assumption that the whole business is being disposed of. It shows the future value of asset of the business. Going concern value is very likely to be higher than the liquidation value, because in the former the assets are integrated in a successful way to create an income stream. The difference between the going concern value and the liquidation value some create an basically the difference between these two is the goodwill, because in case of liquidation the reputation, quality of reputation is no more, whereas in the going concern the goodwill is more, earning power of the asset is more. Next is the replacement value. The replacement value method attempts to determine the current cost of reconstructing the asset of the concern. This value must be reduced by the amount equal to the proportion of remaining life of the asset or to its original life. For example, half of the asset life has expired. The replacement cost should be cut in the half. A major objection lies in this, that typical business in um, typical business is much more than the sum of its physical assets. While the cost of replacing the physical properties can be calculated with same exactness of appraisal cost of duplicating, etc. So basically these were the four methods, or we can say these were the four methods which are included in the asset approach to valuation. The next approach is the market value approach. According to the market value approach, the value of company is determined on the basis of actual value or the current value of securities of the company at which securities are sold in the market. If we are examining the company whose stock or debt is trading in the security market, we can determine the market value of the security. This is the value of a debt or equity security as reflected in the bond or stock market perception of the company. Market value is sometimes argued as it is a true measure of value on the ground that it represents the current valuation in the marketplace, which is set by the buyers and the sellers. तो buyers and sellers decide करते हैं कि market value इस particular company के share की क्या होगी. और it has an advantage that market value approach is the price of security in the free market. It serves as an effective common denominator of all current ideas of the worth of a security. Mm, It has certain problems also, that market price is affected by the volatility of the market. There are certain speculative activities also which uh, affects the price of a share, and there is third problem that often arises to the valuation large block of securities that sale price for the date is question mark, may be based on the sale of 1 or 200 shares. It may be fair and appropriate to apply the price set on the small scale as a large block of shares. Next approach is the capitalized earning approach. In this, value is obtained by multiplying the annual net income of the company by appropriate multiplier would be the real value of the company. So these are the three approaches on which the assets are. Basically, these were the three approaches which are used for the valuation, or we can say these were the three models which are used for the valuation. Thank you so much.